What if you could turn $53,000 into a paper fortune of nearly $48 million? In January 2021, one guy did exactly that, a financial marketer posting research from his basement. By 2020, GameStop was a struggling brick-and-mortar store in a digital download world. Sales were collapsing. Wall Street smelled opportunity, and the biggest hedge funds bet on the company's failure using short selling. Short selling works like this. You borrow a rare game from a friend, sell it for $50. Wait for the price to drop, buy it back cheap, and pocket the difference. But if the price shoots to $500 instead, you still owe your friend that game. Your potential loss is infinite. The hedge funds didn't just short GameStop, they went all in. At one point, more than 140% of all available shares had been borrowed and sold short. More shares than actually existed. A trap waiting to spring. The trigger was Keith Gill, known online as Roaring Kitty, a licensed financial analyst. He saw what Wall Street missed. With new management and consoles, GameStop wasn't dead. He invested $53,000 and started posting his research on Reddit's Wall Street Bets forum. For months, his posts were background noise. Then late 2020 hit, and the forum caught on. Users saw the enormous short interest the hedge funds were bragging about. They realized it wasn't strength, it was fuel. If the price moved up, every short seller would be trapped. It became personal. Payback for 2008 for a system many felt was rigged. The battle cry, hold the line. In January 2021, the trap snapped shut. GameStop started the month at $17. The Reddit army kept buying. Short sellers got margin called and had to buy back shares. But their buying drove the price higher, forcing more shorts to cover, driving it higher still. A feedback loop, the short squeeze. On January 28th, GameStop hit an intraday high of $483 per share. Melvin Capital, one of the biggest short sellers, lost 53% of its value in a single month and needed a $3 billion bailout to survive. Then the rules changed. Robinhood and other brokers suddenly restricted buying GameStop. Users could sell, but not buy. The buy button vanished. With demand cut off, the price crashed. Retail investors felt betrayed. The mid-match rules change triggered congressional hearings. Melvin Capital eventually shut down. Keith Gill's $53,000 was worth nearly $48 million at the peak. He became a folk hero, the face of a movement that rattled Wall Street. The saga proved something nobody on Wall Street wanted to admit. A scattered crowd, coordinated on a public forum, can actually challenge the most powerful institutions in finance. When Keith Gill returned to social media in mid-2024, GameStop's stock soared again. What's your take? Populist uprising or dangerous bubble? Let me know in the comments and subscribe for more deep dives.